Hello everyone and welcome to Baltic Horizon Fund Investor Conference webinar about financial results in the third quarter and 9 months of 2018. The webinar will be hosted by the fund manager of Baltic Horizon Fund, Tarmo Karatam. If you would like to use the opportunity to ask questions from Tarmo, please use the question box on the right side of the screen. Please, Tarmo, you may start the presentation.
Thank you. Greetings, everyone. Thanks for joining. I'm calling in from Riga today to host this webinar and have now a possibility to give you an overview of the latest quarter. We are already in the beginning of November, so I'll mention a few things as well what has happened recently. But let's kick it off then with the few slides that I have prepared here. So just to go over the past couple of quarters and the main events that have really sort of been the milestones for our fund this year, and this topic of issuance of the bond that has been quite widely discussed also in previous webinar and in some presentations, but just maybe a few words once again, why we did the bond at the beginning of the year and at the same time also got the Standard & Poor's rating for the fund. The idea was really to diversify the sources of financing, and the banking sector in the Baltics is, let's say, living through quite a bit of turmoil. At the same time, the competition between the banks have worsened. So instead of 6-7 usual players that real estate investors go for mortgage loans, we have, let's say, in the competitive sector today, basically a couple of them left, 2 or 3, and as well the Danske let's say money laundering scandal has, I think, also left its mark. I wouldn't say that it has directly affected the yields or the market, yet, and I don't believe it will. As at the moment, it doesn't seem that it's a systemic risk and that it is spread out, for all the banks. But it's also a political topic. At this point, I have a belief that the banking sector, not only in the Baltics but the Nordics, will weather the storm, and we will survive. But I think it's also a good thing that the dirty things are sort of laundered out now, and the system will be much cleaner once they get to the end of the road with this investigation. So that's more the reason for us to look at the alternative sources of financing, and as well that we do expect cost of financing and Euribor to gradually start increasing, not drastically, but I think following ECB will start following the American Central Bank's moves, and that will make the cost of financing in the future a bit more expensive. And the bond, is really tapping into fixed income investors, which is very wide market for this source of financing. And the first bond that we issued, 30 million euros, was at a coupon of 4.25%. We do believe that the first coupon and the first bond is always a bit more expensive than the following issues. So it's a good start, and we had initially 8 of the institutional investors subscribe for it, and I think today it is listed on Tallinn Stock Exchange, and the number of investors has increased after the listing. So what we did with the with the bond, was to pay back some of the bank loans. So the ideal capital structure for Baltic Horizon today is 45% bank loan, on average, because that's where we get bullet loans when we get rid of the amortization part, 10% bond and then 45% equity. With this move, we were also able to eliminate the amortization of the bank loans, meaning on an annual basis of 1.5 million euros was left or is being left in the fund. So and we can either do follow-on investments with this money or expansions we can finance with that money which is left over. Throughout the year, I think we've been quite successful in paying out a steady dividend. We've had a slight increase in the dividend amount every quarter. I think the management team believes to have a steady dividend throughout the year on every quarter, not specifically be related to the last quarter sort of net cash flow, because in some quarters the capex can be higher, in some quarters the capex can be lower. So we have had a very sort of steady dividend stream, and if you look at the rolling average based on the average market price, then we are for the past 12 months we're at 7.8%. So payout ratio has been around 90%, so we still have a little buffer there, and we're looking to continue paying out a very steady dividend also the quarters and the years ahead. So just maybe haven't clarified this or haven't sort of stated this for some time now. What is our strategy? And just to make it very clear, we are a REIT-like fund. That means that we target cash flow properties. We target potential increase in our cash flow properties, and at least 80% of the cash generated will be paid out to the investors on a quarterly basis. We have a diversified strategy, meaning that we are looking into investments in Tallinn, Riga, and Vilnius. We believe that the best risk return is in the retail and office segment. In the retail segment, I think the risks overall have been increasing lately. So our preference is maybe more on office now, I think, as for many other real estate investors in the Baltics. We are as well, continuously trying to capitalize on the trend of back offices, Nordic companies and international companies moving their back offices and research and development centers into the Baltics and into Vilnius continuously, but also more and more in Riga, given that the new supply of offices is coming to the market slowly. And we are capitalizing on this trend. That's why the offices that we have bought are not all of them in the CBD areas, but rather in a very attractive B1 location with long-term tenants, because that's where the most of the demand for offices in the Baltic capitals is today. And that trend is continuing. That trend is even strengthening. So yes, this is the base for our diversified strategy. And we're still on a lookout for good cash flow assets, but very much focusing on working with our properties, expanding the properties. The biggest example is the buildings in Tallinn, Coca-Cola Plaza, Cinema, and Postimaja. We're working very hard on getting new square meters into the complex and improving the city quarter, which is really in the heart of Tallinn. We are in a process of finalizing our concept and design, and as well getting the right permits in place with the city. I think next year, beginning of next year, we'll start to have next big news on that site. We are also, as I mentioned, looking to acquire further cash flow assets. I think our focus today is more in Riga and somewhat also in Vilnius, less so in Tallinn. But like, we've been relatively cautious about looking at new assets and really describe for us what are the strategic long-term assets that that we know in the Baltic states that we would like to buy for a holding period of not less than 10 years, closer to 20, 30 years. So to negotiate a good deal has not been easy. There is a lot of properties on the market. At the same time, I've seen also properties that have had very low expectations, around 6% yield, and a year later now having been sold at 7%. So I guess all buyers are relatively cautious. What I could also mention about the real estate market, the way I see is that there are not that many new players, in the market, and that than in the previous years. It's still the usual suspects that are looking to sell and buy properties in the Baltics, and there's a reason for that. I think for many large investors that could consider the Baltics, the properties here by just the gross value are still too small for them to consider an increased presence here. So we did witness this year one large transaction by a South African REIT, which is as well a real estate investment trust, into a large shopping center in Vilnius, and I think properties such as 100 million euros plus are interesting to those international investors that are sort of lurking around here. But I think the universe in the Baltics is mostly the average deal is between 5 and 30 million, so relatively small still for any newcomer. So maybe that's been a barrier of entry for some of the real estate investors, because the investment environment here continues to be attractive. The interest rates, if you can fix them still today at around 2%, maybe slightly above for some buyers and for some properties. But as I said as well, or maybe hinted, that I've seen really a stabilization in yields, rather in some cases even a small upswing. So I consider the market quite stable. Maybe one thing to note here for investors is that we are strengthening our management team. We're hiring a new portfolio manager that would be focusing on the asset management of the properties in the portfolio on a very, very, very regular basis, since we have grown as well from 90 million euros in 2016 to 250 million this year. So we're looking to strengthen the team also with the analyst that would support then the management team. This is a quick slide about the diversification of the portfolio. I believe that we have achieved the target that we have set for us after the listing, that to become a diversified REIT, to diversify the risks, and really take advantage of the small differences of the real estate markets in Tallinn, Riga, and Vilnius. The Latvian allocation in Riga allocation today is the lowest, so I think it's quite reasonable to expect some increase there in the future quarters. And I'd say we're about 50-50 with office and retail. We may consider one or two retail investments, but the main focus is on offices rather than retail today. This is a good chart, I think, or sorry, it's yeah, pie chart. So it shows the biggest tenants that we have. We're very proud about our tenant mix. I also received a lot of compliments from Standard and Poor's, who gave us the MMM3 rating at beginning of the year. That that the tenants that are actually present in the Baltics, many of those international names are housed by our properties. Overall, there's not been pretty much any changes in the major tenant mix that we have. There are always some small changes in the shopping centers that we have. Small satellite tenants being replaced sometimes by new tenants. But I think the key tenants have been in place under long-term agreements. We're continuously in contact with them, so we're quite happy with the cooperation that we've had. The financing summary part is basically saying that the cost of debt, fixed cost of debt for the portfolio is 2.3%. It slightly increased because of the bond, but then again became let's say diversified the sources of financing. LTV is around 53%. I think we have some room there to increase, but not a lot. As you can see as well, there's no debt amortization, almost non-existent now, and the debt maturity is around 4.3 years. And it's also a sort of visualization of where our loans are currently, and some of them will be now soon up for renegotiation, but only in let's say 3 years time. Then a few things that I have not shown in the past in the presentations, but I think interesting to consider is really the new wave of let's say startups that has been finding its place here in the Baltics, and they're all Baltic startups. This is a slide only about Estonian startups, and if you look at this chart, then you understand that 10 years ago, we didn't have this industry, and if you look at just in 2018, around 300 million euros is being raised, with some of the bigger amounts, going into Taxify. Approximately 400 million in turnover, which wasn't there ago. So thousands of people being employed in this value-adding startup. So it's just interesting to note also for the real estate industry that this is new demand, a new demand coming from also demanding tenants. Such as Taxify, such as TransferWise, Pipedrive. They're all expanding, and some of them are expanding exponentially. So this is also to show that there is a strong demand in the office segment today. And if you compare the stock of modern offices, we're still 4 times behind the let's say matured cities, Stockholm and Helsinki. Quite interesting to note that for example, in Stockholm, there's been some stabilization there in the high-end residential segment. But if we talk about the commercial segment, then the commercial real estate has done extremely well, still continuously. There's a huge demand for new office space. So I think in this part of the world, where the economies are very much service-based, technology-based, companies are moving more and more towards that direction. So we believe that it gives a healthy demand for office space also in the future. There are some specialized tenants in the office segment. also in the Baltics more and more, but it's very popular in Stockholm to have these shared offices. Also, large companies are using those. I think in the Baltics, the names that are leading the way here are Workland and to some extent Regus. So good to see that this niche is also covered in the Baltics. Second slide is about Vilnius as well, showing how strongly they have established themselves as a shared service center hub. And if you compare it to some of the other, let's say, back office cities in the CE region, then you can see that both Kaunas, Riga, and Vilnius still have a lot of potential. So again, signaling the fact that there could be even more demand in the office segment in our capitals in the future. Of course, today the risky thing is to own an old office building where one would have to invest a lot of capex in order to make the property attractive and as well energy efficient. So yeah, new and modern buildings are the most sought after by these tenants. And of course, ample parking. So many times these offices and office hubs are not in the old town or not in the central business district area, but a few kilometers out. Moving on to the financial results. So I think it's been quite evident that since we have grown quite a few more properties, that the rental income has increased. Overall, all these numbers, there's nothing extraordinary in them. These numbers have increased in line with the portfolio increase. I think you can also see in our quarterly reports, property by property, what the NOI has been doing, and for some properties we already have several years of track record. For some of them, only a few quarters. I think as well in the annual report, these tables about the NOIs of the properties and how those have developed over the year and over compared to previous years will be shown. I'm happy to say that in most properties the rental income has been increasing in line with the inflation and sometimes even more. With also some properties that have relatively remained stable due to changes of some small tenants, maybe higher vacancy. But overall, the portfolio NOI, as is increasing in line with the indexation in the agreements. Snapshot of the balance sheet as well shows quite clearly, that the cash has been invested beginning of the year into Postimaja and as well LNK Center in August. And we still have a possibility with our current capital structure to buy a smaller office building in either Riga or Vilnius, and there is actually in a past we have mentioned that after Duetto 1 was built, then Duetto 2 was also going to be developed, and we are it's a sister building, copy paste next to it. It's again a B1 location, back office in Vilnius. So that's what we are looking to acquire now as a follow-on. I think the equities and liabilities here are quite self-explanatory, and yeah, we have been regularly paying out the dividend, so that's the reason as well to see every quarter the NAV dropping slightly because of the cash being paid out to the investors. As of 30th of September, the NAV was close to 110 million. Now, after the latest payout, the NAV will be around 107.5 million. The evaluations are on their way. They will be done in December. They will be reflected in the end of December NAV as also in previous periods. Maybe a few words about the buyback as well. We have conducted we have been conducting the buyback, and to a smaller scale, but it's really, to strengthen the financial and the capital structure of the fund, and to aim to it's basically a tool in a toolbox that has allowed us to let's say decrease the volatility a bit on a stock exchange, especially when small amounts are being traded. And it's as well our message to the market that we believe in the cash flows, we believe in the property values, and we believe in the NAV of our fund. There's a slide here as well about our debt facilities by property, and it shows that about 89% of our loans are with a fixed rate, and the fixed rate, the total cost being 2.3% for the portfolio. We haven't hedged the remainder of the 11% for the reason that we believe that it is solid enough, and the cost of hedging today has become considerably more expensive, so no point to really pay for it in advance. And as we do also expect the cost of financing and Euribor overall in the market to increase, but not fast with a fast pace, but rather gradually. And maybe starting from next year, or probably 2020 will be the first year where ECB will increase the base rate by maybe 25 basis points, but it's going to be, as at least right now we expect it to be slow. And here maybe an interesting slide about the secondary trading of our units, and of course some summer months have been there's been less activity, but really recently we've seen an increase in the trading, and we're happy to see that a lot of trading has been happening in Tallinn Stock Exchange. As you know, in Tallinn we are listed as a euro investment, in Stockholm as a SEK investment, and if you look at the turnaround, then the market capitalization that we have, approximately 105 million, is being turned around in less than 7 years. So that means that on average we have a trading of around 1.2 to 1.4 million units per month. And I think in overall, considering the both stock exchanges, we're one of the more liquid listed securities in the Baltic market. I think I saw a report by Swedbank, was it a couple of weeks ago, where we were actually number 5 in terms of liquidity, and behind the big companies listed in the Baltic states. So we're quite happy with that investors are able to sell or buy in case they want to. So that one has been the main idea of listing the fund back in 2016. And that actually concludes my short presentation. We are in the process of private placement right now, and we're looking to raise up to 20 million euros, as described also in the release. And the funds that we are raising it for a specific purpose. Partly to acquire one or two strategic cash flow assets still in Baltic capitals, but as well to be ready to finance our expansion possibilities. And next year, I think there will be some movement there. Of course, these expansions are long-term projects, so all of us investors need to be a bit patient in that regard, but I think the future remains bright. There's a lot of value that I think that can be unlocked over the next, let's say, 3 to 5 years. That being said, these expansion projects are relatively small compared to the portfolio value, so we will definitely not discriminate in regards to the dividends, or we will continue pay out maximum amount of dividends that we generate from the operations of the portfolio. And I'm happy to answer any questions if there are any.
Yes, thank you for the presentation. Now Darmo will proceed with the questions in the order they were received. We currently haven't received any questions, so I would like to remind you that you can send in questions using the question box on the right side of the screen.
Okay, I don't see any questions, but happy to receive them anyway. If there are any, over email, then we can address them in the next webinar, or as well, I know at LHV Bank has a forum on Baltic Horizon, so we're constantly monitoring that as well, and as well as other channels. So in case of any questions, one could also put questions there.
Yes, if there aren't any questions, this will be the end of the webinar. The presentation will be available on the Nasdaq Baltic YouTube channel on webinar playlist. Thank you, Darmo, for the presentation and for the insight, and thank you, participants, for joining.
Thank you.